Good morning, everyone. Thanks for joining us. I'm Rob Emmett. I'm a video director and editor and the owner of a video production company called Win-Win Productions. And today I'm producing and facilitating this webinar with some colleagues whom I'll introduce in a moment. These colleagues of mine are specialists in different areas of business, and they're going to unpack some ideas that we think are important for business people like yourselves to know. A lot has changed in a very short amount of time in this country. And businesses need to think not only about how to work through a global pandemic and one of the greatest economic disruptions in history, but also how to set up for a successful recovery. We're holding 3 webinars this week on different topics, and today's focus is on cash flows and the related difficulties and opportunities the shutdown has created. We'll have a brief introduction about this topic from our featured panelist, Jennifer Denil, and then the 3 panelists will unpack it for us. Now, we're not taking live questions in these webinars. However, I will pass on your questions to the panelists and they'll get back to you by email. So when you ask a question to a specific panelist, please be sure to include their name in your question so I can send it on to them after the webinar. To type in a question, just open up the Q&A panel and using the Q&A icon in your Zoom menu, and you'll also be able to like and comment on other viewers' questions there as well. So right now, I'd like to introduce our panelists. Our first featured panelist for this webinar is Jennifer Denil. And Jennifer is the owner of JD Financial Associates. And she is a certified public accountant who provides fractional financial controller services to closely held businesses. Jennifer assists her clients with understanding cash flows, increasing profitability, and identifying cost savings from operational efficiencies. Her clients benefit from her 30 years of financial experience without the cost and of a full-time employee. Most recently, she has assisted many companies of varying sizes with navigating the CARES Act funding opportunities. So that's Jen. Now, Andrew Bell is a tax and estate planning and transactional attorney with Schoenberg, Finkel, Newman, Rosenberg, LLC in Chicago. He assists closely held business clients with their succession planning, provides tax analysis as part of the firm's transactional practice, prepares estate and gift tax returns, and maintains a sophisticated corporate practice. Andrew received his JD from Loyola University Chicago School of Law. After graduation, Andrew returned to Loyola and earned his Master's of Law in Tax. And finally, Mary Erlain is the founder of Peak Development Strategies. She believes an organization's foundation is their people, that is their employees, management, and owners. She is a published author of business books. Her most recent books address the opportunities and challenges of the multi-generational workforce. Generational diversity is a root cause of many of the problems in business today that affect growth, productivity, and profitability. Mary says, as the constraints of doing business ease due to the pandemic, don't forget your people. She believes that a culture needs to be rebuilt in order for a business to sustain itself going forward. So now today's topic is cure your cash flows. And we're going to start with a brief overview of the topic from Jennifer Denil and then open it up for the whole panel to discuss, and I'll wrap it up in about half an hour. So let's begin, starting with Jennifer. Jennifer, how has this disruption changed how your clients are dealing with their cash flows? What are some main ideas that you'd like to talk about today?
Right. Well, first, thank you, Rob. First, I have a disclaimer. I have 2 cats who normally sleep all day, every day, and now they're up running around talking and fighting. So if there's a disruption, I apologize in advance. They speak English, I'm convinced of it. Anyways, so the biggest change has been, one thing I just want to cover really quickly is the PPP program, which is the loan from the Small Business Administration that a lot of businesses have availed themselves of, and most companies have now received their money and now need to start thinking immediately about how they're going to keep that money, spend it appropriately so that they can get as much of that forgiven, because whatever is not forgiven has to be paid back in 8 weeks or up to 2 years. So there's 3 haircut steps where you step down from having the full loan amount forgiven to having less forgiven. The one is looking at your full-time equivalents compared to a base period of time, full-time equivalents, what you're paying today in the next 8 weeks. The second step is spending 75% of the loan amount on payroll costs. And then the third step is spending 25%, the remainder, on other qualified expenses as defined in the rules. So just wanted to make everyone aware of those 3 haircut steps of the loan not being forgiven and having to pay some of it back. The full-time equivalent, I'm finding, is the biggest haircut and the biggest hurdle to get over. Start talking to your accountants and your advisors right now. It's because there's some planning steps you can be doing to maximize the amount of money that you're keeping. There's also some issues up in the air about the taxability of the loan forgiveness portion, the deductions. As of today, it's a net zero effect, meaning you don't report income, but you don't also get to take the deduction for the expenses. So that's still being discussed at the national legislature, and that could change. There's also a good faith certification due this Thursday. And my research this morning, there's still no guidance on what this is supposed to look like, who you're supposed to provide this to. So stay posted on that. In addition, for small businesses, there's also a waiver of a portion of the employer's Social Security tax. So make sure you talk to your accountants about that. So that's some money that companies have been able to get into their coffers to kind of help them through this crunch right here. The other thing that I'm working on with my clients right now is doing projections with them. And they can be, for my small businesses, they're very simple. They take me under a half an hour. I'm able to give them guidance on where they can cut costs pretty quickly, and also giving them guidance on when they're able to reopen, or if they're doing some things right now, what kind of revenues they should be trying to get just to cover their costs. At this point, it's just try to break even and keep the cash flowing. Don't try to make money, get through the next 60, 90 days, probably into the fall, late year. A good practice to do is take a look at your historical costs and trends and identify where you can cut costs. Some easy haircut things that you can do pretty quickly is renegotiate cell phone bills, renegotiate internet bills, reach out to your vendors to see if they're willing to cut their costs to you depending on what line of business you're in. If you have a line of credit with the bank, make sure you're talking with your bank and keeping them updated on what your operations are looking like, what you're expecting them to look like. Your bank will probably be wanting a cash flow projection from you, especially if you have a renewal coming up, because banks are now in pretty deep with these SBA loans, and they're going to be a little more nervous about giving out regular line of credit loans. Another thing that is out there that's relatively new through the SBA are these Main Street loans, which are lower interest rate loans over several years, repayment plans. I think they're supposed to be a little bit easier to get. They're supposed to be in addition to the PPP loans or to companies that were not able to get the PPP loans. So that's another option as well. And the same banks that were providing the PPP loans can provide these as well. Make sure you're not turning off your sales and marketing business right now. I know a lot of companies think that's an easy way to cut costs right now, and it's not, because what you're doing when things start to get going again, you won't have a pipeline of sales that will be ready to go with buyers out there ready to go. So make sure you don't cut your marketing costs right now. Think about what you've been doing the past 6-8 weeks already to streamline businesses. How have you been doing things differently to accommodate people working at home or doing processes at your plant differently? And what are best practices that you want to retain and keep going forward with that could result in cost savings for you going forward as well? So I think that's kind of an overview, Rob.
Yeah.
Can
Yeah,
open.
thanks for that. Appreciate that. We're going to open it up now to to all three of you. I'm going to step out again, but all three of you can start to unpack this. Andrew, Mary, ask some questions of Jen from her area of expertise, and then provide your own. So let's begin.
So, Jen, could you dig a little deeper into maybe giving us some tips on what expenses beyond, cell phone, internet, but what other areas can a small business actually improve cash flow?
Yeah, another good area is, and we've had some discussions with Andrew about this. Hopefully his audio can get repaired here. Taking a look at your lease obligations that you have, whether it's for office or plant or equipment, reaching out to those vendors, reviewing those documents to see what kind of flexibility there is in there. Some documents have a force majeure clause in there, which may be getting activated with the declaration of an emergency right now by both the president and the governor. And so that may provide some leeway as far as maybe deferring payments or renegotiating terms or pricing. But that's something that, I'm somewhat familiar with leases and could provide some guidance. But you really should talk to your attorney, whoever your business attorney is, or whatever attorney helped you negotiate the lease. Also, real estate brokers can help with that as well. So make sure you reach out to professionals before reaching out to the landlord to initiate that renegotiation.
Jen, I had one comment and then some questions. The comment was on those PPP loans. There is a push to make them deductible, so that the business expenses you use the PPP loans for. Right now, you can't get the loan for free and then take a deduction for the money you use the loan proceeds to pay for. But there's a push as another form of relief to business owners to allow that payroll deduction, the rent deduction, the ordinary business expenses, to include those with the PPP. So keep an eye on that. I know it's something we're monitoring. There's a lot of different proposals in Congress out there right now, from $2,000 a month to every American for the next X amount of months to the PPP. So there's going to be a lot of developments. I think that you guys will be keeping an eye on. I think what you guys were talking about was renegotiating contracts and leases. Is that right?
Yes, yeah, and we were talking about involving their attorneys and the force majeure clause that's in a lot of these documents.
Yeah, and on that, I'll talk about that more during my segment. But
Okay.
Most people's force majeure doesn't include global pandemic. I still think if you have a widely drafted one, you're probably okay. But certainly consult with an attorney beforehand. So my question is more this. It looks like there are certainly some temporary cost-cutting measures, such as like the lease negotiations and everything. And then there are some that I think that might be more permanent. When you're talking with your clients, do you run a projection? Hey, if you allow X amount of people to work from home, or do you really need this much office space because of that? Are you looking at, do you have clients and are you starting to recommend actual wholesale changes to business going forward based on how they're able to operate now?
Definitely. Yeah. I have one client who has several offices across the country. He also has a couple locations that he's been operating with no physical office, just employees working from their homes at a couple locations. And so he is starting to implement that plan across more of his offices, trying to get out of some of his office leases he's got. But I'm definitely talking to my clients, how can they keep people working at home? Can that result in the reduced need for office space and then reduced leasing costs and physical plant costs for something like that? On the flip side, there could be some cost increases as well for physical light manufacturing distribution places where they're going to have to incur costs for additional PPP, sanitization on a more frequent basis, some kind of blockage between people working, maybe even redesigning their plant the way it's laid out so that people can be spread out more. So it's going both ways. There's some potential cost savings or some potential new costs that may not go away for a couple years, if ever. This may be the new way we do things. So.
And go ahead, Mary. Sorry.
Oh, I'm done. Go ahead.
In regards to the idea of working from home, we've had some offices are more up to date on that and are using that idea of hoteling. The thing I think about is record keeping, accountability, software. This has forced some significant expense on these business owners in a very short period of time. But how do you help those small business owners understand what they need so they are maintaining that accountability, that compliance, that workflow?
Yeah, a lot of businesses have incurred extra IT costs in the past couple of months to be able to accommodate people moving out of the office who maybe have been using desktops in the office and now they need laptops. They need that all set up. They need remote access set up. They're revisiting how they're networking instead of doing a physical computer network in the office that needs to be maintained and updated with hardware. They're moving out to the cloud and looking at different cloud solutions that are accessible from anywhere, thinking about security on that. And then there's other issues about how do you make sure people are doing what they need to be doing, accountability, productivity accountability. If you need someone that, say, you could have a receptionist who's answering the phone from home. So that person needs to be working specified hours. So maybe that person logs on to some kind of computer application to log their hours worked. So there's all different kinds of solutions. They require investment, but they're going to be something that now I expect will save money over time, over the next couple of years.
So how do you take the small business owners who are typically focused only on profitability and begin to shift their attention over to cash flow? I mean, that's a huge bridge to cross for small business owners who, especially the newer business owners or the sole proprietors who perhaps don't have that in-depth understanding and of the difference.
Right, the difference between a profit and loss, which may or may not reflect cash flows depending on your line of business, and a cash flow projection, which looks out into time, says, here's what I think I'll collect from my customers over the next 6 months. Here's what I think I'm going to have to pay out to my vendors and my payroll. This is how much cash I think I'll have in the bank 6 months from now, and be able to go to your bank with that information so that they feel more comfortable giving you a loan. But it is two different things. And right now it's kind of the same thing, because from a cash flow standpoint, a lot of businesses are just trying to break even, just cover their bills. The small business owner cover their living expenses, but not really try to get ahead for the next 60 to 90 days. But at the same time, thinking about what can you be doing today, what costs can you be cutting, what best practices can you be doing, what communications can you be having with customers and vendors so that 6 months from now you can really hit the ground running and start having some good positive cash flows. But it is two different things. And cash flow requires a lot more planning than just being profitable and bidding out a job that's going to be profitable today. If that customer never pays you, that job was a loss. That was not a profit at all. So, think about, should some customers be paying you a down payment deposit? Should some be on COD? If you look back at your accounts receivable aging and drill into payment patterns of some of your customers. And I find that just a friendly communication with a customer will put you on their radar, and most of the time will get them paying more promptly and more regularly. Just the squeaky wheel gets the oil when it comes to accounts receivable. So just a simple phone call, email, reach out. Even if you can't pay the whole bill, can you pay me something? Put a down payment on it. Let's get you on a payment plan. Pay me $100 a week or whatever you can work out with them. And then same thing with your vendors as well. You want to stay in good communication with your vendors so that when you need them, like right now, and maybe you don't have good cash flows, they're willing to extend your credit a little bit more and trust you a little bit more. I think another thing we talked about, well, kind of bleeding into this as well, is cash flow for the business owner on a personal level, and applying these same practices to your own personal costs as well. Are there things that you're doing personally where you could cut your own costs, and then in turn, that would take a lot of the financial cash flow burden off your business as well? So those are harder decisions to make because they're more personal, but it all goes together with a small business owner.
So I'm also thinking about something, and it depends on how wealthy your small business owners are, but if your business needs short-term cash flow, you can consider member loans or shareholder loans where you actually become the lender to your business. Some people may not have the means to do so, but that's a chance to, it becomes payable on books. And I'm just thinking about other ways you can inject cash into your business, and probably avoid those the business payday lenders that you see out there that say $50,000 in 24 hours. I mean, the interest rates are incredibly onerous, and I think this, maybe just as a general thought, talk to your professionals, talk to your accountants or bookkeepers before you take on any loans, be it from Bank of America or something online. This is a time, especially when the pressure is high. It's no different than reaching for the Hershey's bar instead of the granola. It may look attractive, but you could end up hurting your business long term by saddling yourself with onerous debt. The government loans, those are forgivable. Bank loans, there are workouts, there are forbearances and processes you can go through with that. But some of these online quick cash, I've had clients before that unfortunately ended up losing their business because they took on too much of this third party unsecured debt. And so just a word for the wise there, I guess, more than a question.
That's a good point. Like PayPal and Square and QuickBooks all have those quick cash loans.
Mm-hmm.
I'm wary of those. Going back to something that you said, Andrew, about injecting personal cash into the business, since interest rates are so low right now, it's a good time to refinance your house or get a home equity line of credit. So utilize that cash to put that into the business it's secured by your home. So, but it's usually at a lower interest rate than what a business loan would be. The other thing to watch for are these equipment loans, equipment financing as well, because those tend to bury these high interest rates in the language of the document. And I find a lot of clients having numerous equipment loans or equipment financing, and it's at like 18%, but they don't even realize that's what they're paying.
So Jen, you touched briefly on the sales and marketing and how typically, I watched it myself in the recession those were typically the two cuts that were made from budget as well as staff. So can you talk a little bit more about that?
Right. Set new sales, keep your salespeople out there. They're going to have to rethink how they're doing things. Maybe salespeople used to go out and meet people, do Zoom meetings instead, like we're doing now. Someone gave me an idea of partner at an accounting firm that used to go out to meet her clients all the time. And what she's done is reach out to them ahead of time, find out where their favorite restaurant is locally to their office, and order their meal for them and have it delivered to them at their house. So then they're both eating lunch, and she's buying the client lunch and having it delivered to their house. So it's still a relaxed social thing. It's on a Zoom meeting instead. So just get creative. Think about, even from a marketing standpoint, a lot of places have, stale marketing plans or logos. If you have the cash available, now's a good time to revamp all that stuff. Again, companies are looking for things to do, so it's a good time to get a good deal probably on something like that. There's more negotiating room. And then that's ready to go when things start getting going in a couple months, hopefully. But definitely don't neglect that. Keep out there, keep in front of your customers, find new customers. You have to keep that pipeline going.
What have you done through the cash flow analysis to give peace of mind to your clients?
Yeah, I have a couple small businesses that actually started in mid 2019. So this was horrible timing for them. And as you said, Andrew, it's more psychological for them. They're in an industry where they were able to stop paying rent. So they're shut down, but some of their costs are gone as well. So for them, it's just a matter of getting through this time period on a personal level, and they'll be able to pick up right where they left off when things open up, hopefully at the end of this month. Another business, it's like you said, it's just getting them out of that anxiety and fear mindset and helping them to understand the cash flow, and that helping them to understand their business and their numbers. And I find that alleviates the anxiety most of the time. Knowing that, seeing that there's a plan, here's where we are. It may, maybe not so good right now, but here's the plan for going forward. And this is what it's going to look like in 6 months or a year from now. And I find by doing that with my clients, that alleviates a lot of the anxiety, because now they know what the next steps are, what the plans are, what I even give them, things they need to be focusing on to get ready, or sales goals for my small businesses so that they make sure that they're staying cash flow neutral. So just giving them specific things to think about alleviates that anxiety for them.
And that's why working with you, whether it's a solo business owner, a small manufacturer, a firm, professional services, because I know what's going to happen if people are not working closely with their advisors is they're going to make knee-jerk, emotional, can't see beyond the end of their nose decisions, which truly can take them under, instead of working with you and have a chance to sustain, and who knows, maybe even grow, depending on the industry.
Right, yeah. And just talking through your concerns and coming up with solutions together. My opinion is always that 2 heads are better than 1, 4 heads are better than 2. I don't have all the answers. My client doesn't have all the answers, but I find that together and with my network of people, the solutions are out there, more creative solutions and opportunities. So yeah, don't call your people. Make sure you call your professionals, reach out for help.
Good.
And hope this ends soon.
All right, I'm going to barge in here and bring it in for a landing. We're at the end of our time. So I want to thank everyone for being with us today. And we did have one comment there from to pass on to Jen. I'll pass it on after this. Thanks for that, Dave. I just want to touch on our upcoming webinars. We do have 2 more webinars in this series this week. Tomorrow at 2 p.m., Mary will be our featured panelist, and she'll help us understand how this disruption may have permanently altered your corporate culture. Many employees are in a different situation and state of mind now than when the shutdown began. Their family relationships have changed, their finances may have drastically changed, and they may have experienced the loss of someone they love due to COVID-19. Businesses are going to need to think carefully about how to rebuild their teams. And then on Monday, Andrew is our featured panelist, and we'll start off with an overview of how business owners should think about succession planning in this economy and how the shutdown alters the landscape of mergers and acquisitions. I hope I described that correctly, Andrew. A panel discussion will then follow just like today. So lastly, if you have any questions about creating video content during the shutdown to keep in touch with clients, creating video to promote your business on social media, or if you like help facilitating webinars like this one, please contact me if you'd like to talk more. Also take a look at my website through the link in the follow-up email I'll send shortly. So I'm Rob Emmett with Win-Win Productions. On behalf of the panel, thanks for joining us today. And we hope to see you all on the next 2 webinars tomorrow and Friday. So have a good day, everyone. Thanks for joining us.